Hello everyone and welcome to the channel. My name is Brent and in today's video we're going to be going into the M1 Finance Roth IRA, doing a quick breakdown of the portfolio. Number two, we're going to go ahead and cover all of our stocks within our portfolio, see where they are trading for the 1 year. Is their stock priced at near all-time highs? Are they offering a higher yield on average over the past 1 year? We're going to go ahead and quickly go over that in today's video. And then we're going to go ahead and cover why we are buying the specific stocks that we're currently buying. And then we're going to go ahead and make our purchase here at the very end of the video. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue. We cover making money, saving money, and investing money. So let's go ahead and get into number one, going over the Roth IRA quick breakdown. So the Roth IRA is my wife's portfolio. We've been invested in this one since back in January 8th, 2018. This one is designed as a dividend growth portfolio, and it is definitely the largest holdings that we have in any single one portfolio. So this portfolio has it has 32 holdings, whereas most of our other accounts either have just 1 to 5 different holdings and not a whole lot. It's mostly it's like 85% of our portfolio is ETFs, and that only makes up like 6 additional positions outside of this portfolio. So this portfolio is definitely the one that is most watched, just because it has a lot more positions, and I like to be more active with this portfolio. But we're going to go ahead and cover all 32 of these positions right now and go over their 1 year. Are they trading near all-time highs, and are they offering a higher than average starting yield? And that'll kind of go into why we are buying the stocks that we're currently buying. You'll notice that as we go through a number of these companies, a lot of these names are going to be names that you recognize or can easily do research on to find a ton of information on them, because they're pretty well known just out there in the mainstream. So with that said, let's go ahead and quickly go over all the stocks within our portfolio, and we'll go ahead and take a look at their 1 year information and see whether they're trading near all-time highs or if they're offering some better opportunity with their starting yield. Again, these are all long-term opportunity stocks. So dips in the market today, this week, this month, this year, in the next 5, 10, 15, 20 years will look like a blip, and it will just be unnoticeable. So as long as the company itself is performing well in the background, they're continuing to increase their revenue, increase their net income, increase their earnings. They may have little blips here and there which offer opportunity, but if you can overlook that, not get emotional over it, and just buy when there's value, there is much more upside and also dividends along the way. So it's kind of my outtake on kind of buying the companies that I've been buying. So let's go ahead and quickly start here, and we'll go through this list of 32 companies, starting alphabetically with Apple. Apple trading near all-time highs, offering a lower than average starting yield at 0.6%. Avi here, again, trading near all-time highs, offering what used to be a nice starting yield over 5%, is now offering a 4.31% starting yield, below average for the past 1 year. ABM Industries, this one has pulled back off their highs. If this one could trend down into the 30s, that may be a pretty good opportunity. Right now, it is not offering a higher than average for the past 1 year starting yield of 1.7. If this one breaks above 1.8, 1.9, or even 2%, that's when ABM Industries could be, pretty good opportunity to buy back into. This one's been in my portfolio, I believe, since the beginning. Avery Dennison, this one trading near all-time highs, pulled back slightly, has a bit of a double bottom, what's noticeable kind of right there. So this one will probably trend and continue trending higher, but that starting yield at 1.19. Cardinal Health, this one offering a 3.37. This one was well known for not too long ago for having a starting yield over 4%. So I don't know if I had bought this one back then, but it was definitely a really good opportunity. Whereas now it is trending not near all-time highs. Well, it is near all-time highs. So it has pulled back slightly. This one's kind of looking like it's going to move higher, but it's offering that 3.37% starting yield. Now, Clorox is one of these companies that we've recently been buying and adding into our portfolio. So if we quickly go over to our portfolio really quick and sort this by our current gains and return, you'll notice that a lot of our positions down and the least amount of gain are positions that we've recently added to our portfolio. Clorox, Colgate, Merck, Hormel Foods are a few of the companies that we've added in recently. Kimberly-Clark is a position I kind of beefed up recently. I bought $3,000 worth on my Merrill Edge account as well. So we'll go ahead and cover that here in just a second. But remember those names. So Clorox, Colgate, Merck, Hormel, and Kimberly-Clark. Those are a few of the names that we've recently started buying a bit of. Now, so Clorox here, if you're looking at over the past 1 year, this one is offering a 2.48 starting yield, which is at the highest point here, at or near the highest point over the past 1 year. So this price over the past year has been trending lower, lower, lower. I never looked at it, never looked as, if I wanted to buy, but here we were showing some signs of support, and here we had a slight uptick. Now this one could continue to trend lower, but I'm taking the opportunity right now to begin buying it at a starting yield of 2.48, up near, way above its current average yield over the past 1 year. Cisco Systems here offering a 2.73. This one's been in the portfolio for quite a while, so it does have a starting yield, as far as my portfolio goes, over 3%, but currently offering nearly half of that at 2.73, or not even half of that. I guess it's less than half, but 2.73 starting yield there. Digital Realty Trust. Let's go ahead and wait for this one to load. This one has a range that it follows, goes up into the 160s, bounces down, goes into the 130s. It just kind of bounces in this range. So right now, where it's at 150, this one's kind of anyone's guess. This one could trend down, continue to trend down. It could trend back up. We can see here, it's kind of using this level right here as support. But if it breaks down below, it doesn't have any more support down into the 130s. So we'll see if this one kind of sticks around this range or it will bounce higher. But overall, this one's offering a lower than average starting yield at 3%. Essex Property Trust, one of the lowest over the past 1 year, down at 2.73. Trading near all-time highs right there. Hormel Foods is one that we've recently started adding into our portfolio. This one has a starting yield over 2%, which is higher than average for the past 1 year. If we look at it over the past 5 years, Hormel Foods does have, that's kind of a bit hard to see there, but Hormel Foods here over the past 5 years, if you're looking for that 2% starting yield or higher, it comes, but it's very, it's not around very often. So you'll see like right here, if you were to draw a line, there are opportunities and chances out there for Hormel Foods at a 1 or a 2%, but generally you're more than likely going to get it down in the 1.75s. And Hormel Foods has a very high, the 5-year dividend growth rate of over 12%. So on average, if you were to hold it over the past 6 years, whatever starting yield or whatever starting dividend you had received will basically double within that 6-year period, just based off their dividend growth. So I bought this one for appreciation and dividend growth. And also within the past 1 year, it's just kind of trading higher on average for the yield with great financials behind it as well. Innovative Industrial Properties. This one's pretty low for the current time. This one's trading near all-time highs. Johnson & Johnson. This one, I remember in the past, Johnson & Johnson used to have nearly a starting yield of 3%, which was a lot of YouTubers, a lot of dividend investors were always basing their portfolios off Johnson & Johnson with a 3% starting yield. This one is now offering a 2.42, so it's definitely pulled back quite a bit, and it is trading near all-time highs. JP Morgan, this one bounced from their all-time highs. They had a bit of a dip right there. This one could trend back lower, show a double bottom, or even break below that. We can see some support there. But as far as the yield, very low yield, one of the lowest starting yields over the past 1 year. Kimberly-Clark, this is one that, again, we kind of added into our portfolio pretty heavy here recently. This one has a starting yield of over 3% at 3.29, putting it at one of the highest starting yields over the past 1 year. So this one is pretty high. and its price has been beginning to kind of tick higher. I started buying it up in 130s, 132s when it started to show signs of support here at that $130 level. And we're going to continue to hold that one, see what that one trends to. Lockheed Martin, trading not all at all-time highs, but we can see that it has been in this area in the past, and then it kind of broke down. And now it's kind of going through what it went through back in September of 2020. So this could move higher, or it could trend lower into that $330 range. But overall, over the past 1 year, I would say that the average would be about 2.75, 2.8. And this one is trading slightly below there. I'm going to go ahead and watch that one again. Lows, trading near all-time highs, starting yield down below midpoint. Main Street Capital. This one is a very nice starting yield of 5.89. But imagine if you had just bought this one prior to January 21, where you could have got starting yields of over 8%. You can see a starting yield near here of nearly 9% back in what looks like October of 2020. So that is a very high starting yield for Main Street Capital. Method here. This one, I didn't buy this one for the dividend yield. This is one of those positions that I added into my portfolio for the growth. So this one is definitely trending higher and higher with no end in sight, but that yield is going lower and lower at 0.89. 3M, trading near all-time highs. That yield kind of below for the past 1 year. Altria, this one offering a very nice starting yield of 7.24. But this is one that I'm kind of waiting to move out of this position. I'm hoping that it kind of picks up. You can see here, it has had some support here at $47. If it breaks down, this one could trend down into the 40s, the low 40s. I'm really hoping that Altria kind of picks it up. I would like to remove this one from my portfolio, even though it does offer a very nice starting yield. A lot of the yield that you're receiving is kind of getting traded for appreciation. So here, over the past 5 years, it has just been going nowhere but down. So I bought this one back in 2018, and it's been going down, down, down. Most of my return in this one has straight been from dividends. So it's basically exchanging capital gains for dividends, and I don't want to be doing that. So I am going to be removing this position from my portfolio, but I'm really hoping to kind of let it go after $50. Mercure, this one, again, we've started adding this one into our portfolio not too long ago. It trended higher off those 72s, now at $78.60. So it is still trading above average for the past 1 year. So I think that Merc is a pretty good opportunity. I think I do want to buy a bit more of that one as well. So I'm looking for positions right now to kind of target my funds towards for maxing out my Roth IRA. Realty Income, not trading at all-time highs, but really close there, with a starting yield of 4.17%. Pfizer is one of those ones that kind of trends. Pfizer is just one of those companies. It really doesn't go anywhere. You buy it for the dividend, and that's essentially what you're getting. So this may be another position in my portfolio that I've enjoyed, but I just kind of want to cut it for some growth. So it is offering a 3.8% starting yield, but over the past 1 year, that is below average. So if you do buy Pfizer, that 4% range, that's pretty nice. Siggy, this is one I bought for growth. Recently, it's just been kind of uptrending, and its yield has been downtrending. Simon Property Group, this is one that's trading near all-time highs, whereas their yield is trading near all-time lows for the past 1 year. Stanley Black & Decker, this one has explosive growth here. Nobody wanted to buy it. 2019, 2020 had a huge dip. As of late, it's been trending near or at all-time highs, but that yield, we could have got it near 2% or higher, some opportunities out there, whereas now it's at 1.35. Here we have Cisco down at 2.38 versus a year ago up in the 3% range. UGI down at 2.86. UGI Corporation's utility trading near all-time highs. Walmart, this is one I've seen some investors buying back during this little period here. That would have been a really good opportunity. Right now, it's down in the 1.56. Their yield, I don't think they've been increasing their dividend very quickly. So that's why their yield is kind of stagnated. Their price is kind of stagnated as of midpoint 2020. and their yield's kind of stagnated as well. Whereas sometimes you see the price kind of stagnate, but the yield jumps up. That's because the company is raising their dividend year over year. Walmart, I'd have to take a look at them, but I think that their dividend's kind of stagnated a bit. And then in the last one here, we have WP Carry. This one came off their all-time highs, but not too bad right there. It is offering a 5.58% starting yield, but it is below over the past 1 year as far as your average. So again, the positions that I have been added into my portfolio, as we kind of talked about, these are all positions that are trading where their yields are kind of starting high. So number one was Clorox. And we'll go ahead and take a look at their, I think we've already covered a lot of their financials in the past, but so Clorox here, brand name, tons of products out there, really well known. And here it's going through a bit of a slump here in the short term, but over the long term, if we take a look at the max performance of this portfolio, over the long term, that's what I'm investing for over the next 5, 10, 15, 20 years. This little slump right here brought it back to normal, what you would say is normal, but it is definitely an opportunity. I don't see it dropping a tremendous amount more than what it has. So I'm definitely feeling pretty confident in this position as of right now going forward. Another position, Hormel Foods. If we take a look at it over the past, eternity here, this one does have opportunities out there. They come and go. Here, this opportunity here recently, let's just look at the past 10 years. I feel like that maximum graph is a bit too much. But if you take a look at the 10-year chart, you can barely see the ups and downs here. There are points where it goes really high and it comes back down to normal. Here, it had a bit of a high right there, kind of come back down to normal. Let's go ahead and throw their earnings in there. And over the past 10 years, you can see there are opportunities. So their earnings kind of dipped right here. Their stock price had also dipped a bit. Their earnings grew. Their price grew as well. Earnings have been dipping here recently, but it's kind of along with their price as well. So again, we're kind of looking at it long term. Another company that we recently added was Merck. Merck, this one kind of fluctuate pretty heavy. Even with their earnings kind of dipping here, their stock price still remains pretty confident through 2018. Here we had earnings go up, their price moved up. Earnings kind of moving back here recently. But Merck here offering a pretty good opportunity. The next one was Kimberly-Clark. So Kimberly-Clark there goes through patterns where the earnings kind of drops. The price doesn't always follow the earnings, but sometimes it does. Here, for example, the earnings had dropped, but their price continued to climb. And earnings dropped, price dropped, earnings climbed, price climbed. So it kind of follows along there. But over the past, maximum amount of time, this company just continues to grow and grow and grow. So these little blips don't really matter in the long run. So that is why we are targeting these specific companies, because at the moment here in July of 2021, these pullbacks and these companies, I feel, offer a really good opportunity to invest for the long term. They're offering a higher than average starting yield of over, many of them are over 2%, and most of them are over the average starting yield for their past history. So we're going to go ahead and jump back over into the Roth IRA portfolio. Today we only have $224 to invest, but I am considering doing a whole dump it all into the portfolio, just kind of dump all of the capital and invest it all right away for the remainder of 2021. Let me know down in the comment section below, do you fully fund your Roth IRA at the beginning of the year and just invest it all, or do you dollar cost average? If you could dump it all and invest it right away, would you? Let me know down in the comment section below. So Hormel Foods here, let's go ahead and sort this by ex-dividend. Ex-dividends right here. We have Hormel Foods coming up on ex-dividend here on the 9th, which is this Friday. We have a few other positions here that also went ex-dividend this past week. We have Simon Property Group, Cisco, JP Morgan, and Cisco right there. The other Cisco, we have Cisco Corporation and Cisco Systems. This is the tech, this is the food distributor. And then we have a few other positions here going ex-dividend throughout the rest of July. But again, we're going to go ahead and target Hormel Foods at the moment. This one has a starting yield over 2%. And I think that's pretty good over the past 21 years. It's been growing and paying out that dividend. Once we fully fund Hormel Foods, we'll probably move on to Colgate. And then we'll look for other positions to kind of dollar cost average our portfolio into. So let's go jump over into the M1 Finance portfolio and let's go ahead and make our buy into Hormel Foods. So let's go ahead and find it here. Should be ticker symbol. Let's just go ahead and do a search there. Right there at the bottom, let's go ahead and click buy. Let's go ahead and enter our available funds and continue and confirm. Okay, we've went ahead and confirmed our buy. So that is going to all take place here on Tuesday. Let me know down in the comment section below, what stocks are you buying this week? How are you targeting the stocks within your portfolio to buy more of? Are you buying stocks near all-time highs with the thought that the company will continue to move higher? Or are you buying some opportunity buys out there looking for more value, trying to take a little bit less risk here in today's market? So let me know down in the comment section below. Again, if you are brand new to the channel, we cover making money, saving money, and investing money for the long term. So definitely subscribe if you have not yet subscribed by clicking the subscribe button down below. Hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in our next video. Bye-bye.